Welcome to Chit Chat Stocks. This is our weekly Power Hour episode. I'm one of your hosts, Ryan Henderson, and I am joined today, as always, by the one and only Brett Schaefer. We've got a lot to discuss on this episode. For anyone that doesn't know, we do these weekly on Wednesdays at 1:30 Eastern Time, 10:30 Pacific Time. And today we've got 13F season. That means any investor with more than $100 million in AUM has to report their US listed holdings. And that gives us a little bit of a peek into some great investors' portfolios, and hopefully maybe it can be used for a little bit of idea generation. But before we dig into that, Brett, welcome in. What topics do you have for us today?
Lots of earnings, really. Airbnb earnings, honestly, forget, but we'll get to them. Elf Beauty earnings, Buffett bought Constellation Brands. Hasn't done so well for him so far. And we have a fun bubble watch where looks like the Argentinian president has got himself in some crypto trouble. And I thought that was an interesting story.
Yeah, and we're going to get to all of that. But before we do, I want to talk about our friends at Public. If you are serious about investing, you need to know about public.com. That is where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond accounts 6% or higher yield that remains locked in even if the Fed cuts rates. What sets Public apart is how they give you the tools you need to make informed investment decisions. Their built-in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset is moving, so you can actually understand what's driving your portfolio's performance. Public is a FINRA registered, SIPC insured, US based company with a customer support team that actually cares. Bottom line, your investments deserve a platform that take them as seriously as you do. Fund your account in 5 minutes or less at public.com/chitchatstocks and get up to $10,000 when you transfer your old portfolio. That is public.com/chitchatstocks. This is paid for by Public Investing. Full disclosures in the podcast description. Okay, before we get to the topics for today, Brett, where you stand on the fear and greed index right now?
Like it's Viability or my
No.
personal fear and greed. Not the CNN one that has weird inputs, but my own one.
Your own fear and greed index.
It's interesting because you see all these articles about investors are bearish. And I don't know how much the crypto nonsense can connect to things or how much this surprisingly strong bubble in defense and aerospace startups are turning into, and how much this AI boom is going to turn into a bubble, or even if it is at all, or if we're just in the early stages of a new huge industry. But on a scale of 1 to 10, I'd say we're at an 8. Maybe 8.5. I'd say 8.5. We're not in full blown. The energy doesn't seem to be the same as early 2021, where there was just disregard for anything rational. But we're getting close.
Yeah.
We're not too far away.
Yeah, I agree with that. And to top it off, Nikola filed for bankruptcy this morning, which kind of gave me a nice little throwback to
RIP.
Checking out their market cap chart, which hit nearly $30 billion in 2021. So yeah, we're not quite, I don't think, at those levels, but there is some, it feels frothy. And really the more frustrating part, I think, for me is that it just feels like the multiples across the board in a lot of the companies I'd like to own are pretty demanding. They're not, there's a couple fallen angels here and there, but it just seems like every time I look up a company, every time I do some digging, I get to the valuation and I just get a little frustrated. And what you don't want to do in those situations is just adjust the numbers a little bit to make the valuation work a little better. So yeah, I don't know. It feels like we got to get a little more innovative. And one way to potentially do that is to study some super investor buys, see if there's anything worth noting. I will go ahead and say that there is a lot more, I think, noise, the news, and some of these 13Fs, like they're just, first of all, you don't want. I was talking with someone the other day, and he said borrowed conviction is worse than borrowed money, and I think that's true. Like, well, maybe not, but it's never good to be buying something that you don't have your own reasoning for buying. You can borrow ideas, and you got to internalize them, but they might own something for a different reason, especially when you're studying the best investors and you follow the 13Fs. They might own it for other reasons. You might be slow to sell. And you just, anytime the price drops a lot, it's hard to really have any conviction to continue buying something when you might want to if you borrowed it from someone else. So, with that said, there were some interesting buys and sells. Do we want to start there this week?
Let's do it, Ryan.
Okay, so I put together 8. We can kind of bunch into a couple of these. Like, I think there's some interest in China from a few investors that we can maybe talk about. But the other one that I thought was interesting, this is not really a noteworthy buy or sell, but I thought it was cool. I looked at Li Lu's portfolio. I've never really studied this guy that closely. Maybe we should do an episode on him at some point. He did not buy or sell a single share of anything this quarter. Do you think you've ever done that?
Yeah.
You've had a whole quarter where you didn't buy?
Probably. Yeah, probably. I don't know, sometime last year. I don't have that much money. And I don't do much.
True. I guess part of it depends on like investments from your LPs and stuff like that, because some of these funds, you'll see that they added to everything and it's really just new money coming in. But the one I wanted to talk about is a investor that we have studied. His name is Norbert Liu of Punch Card Capital. That's kind of the first one that stood out to me. Norbert Liu he's very secretive and kind of notoriously almost too selective, you could say, in terms of investing. And he doesn't really seem to invest in a lot. He owned NVR for like 20 years, and that's kind of where he made his fame and probably all of his outperformance for the most part. But he has not purchased a new stock, at least not a new US listed stock, in basically over 2 years. I think it's been 2.5 years since he added anything new. And this quarter, he added the Chinese e-commerce giant Pinduoduo. And I do find it weird that like you're that selective, you haven't found anything, and then you finally buy one that, whatever. I mean, not I don't know. People sometimes I see a lot of commentary about Norbert Liu that's like, kind of get off your high horse, just buy something already. I don't think he's doing this for like impression that he's so selective. I think he just is maybe slow to react, or just, I think it's mostly a lot of his own money at this point too. I actually got some interest in Pinduoduo after reading this, even though we have a no China policy. I know, Brett, you're giving me an eyebrow raise there, but
my policy is ABC, anything but China.
Yeah, I think that has served both of us well. The other person that ended up buying Pinduoduo that it's worth mentioning, Michael Burry. Now, we just had a whole episode where we basically said there's very little value in tracking his 13Fs because
he probably already sold it.
Turnover is incredibly high. But the part I thought was kind of interesting about this was he sold a whole bunch of his other Chinese positions. So sometimes he'll do kind of like thematic trades, it feels like. So this quarter he bought a bunch of healthcare stocks. But he sold Baidu, he trimmed Alibaba, he trimmed JD.com, and then he added a new position in Pinduoduo, which I thought was just kind of fascinating. So it's not just like an overall bet on Chinese equities re-rating. It seems a little more distinctive on Pinduoduo specifically.
Yeah, I don't care. You have Burry and Liu. I don't care if all these great investors are buying Chinese stocks. Munger, Pabrai, and Guy Spear, and others, I think, piled in to Alibaba. Terrible investment. Stock has gone nowhere for 10 years.
Yeah. I guess we can shift to some of these other ones and see if any of these interest you. I thought this was interesting. Dennis Hong, who's an investor I really like, he runs Shaw Spring Partners. He sold his entire coupon position.
Interesting. Maybe to buy something else? Any buys,
Yeah,
or do you not remember?
uh, he did buy 2 new positions in CoStar Group and Braze, and he may have added to some, but it kinda
CoStar's expensive, man. CoStar, have you ever looked at their valuation?
yes. Well, I mean, obviously it
Yeesh.
changes, but last time I looked, it was quite expensive.
Yeah.
What is it? Are you looking at it now?
No, I'm just saying, stock hasn't gone anywhere in 5 years, and I should have FinChat loaded up, but I'm guessing it's still quite a premium multiple. Maybe I'll just find, like, a gross profit multiple quickly here.
Yeah, I I don't want to read in too much to this because sometimes there could be like I don't know, is coupon only listed in the US? Like sometimes I've seen situations where they sell the US listing or they like transition it into a foreign listed uh, equity and it doesn't show up on the 13F, but it doesn't actually change their exposure to the company. It just seems weird because I don't think there was really anything that happened to Coupang in the last 4 months, neither price action or events that really changed how I thought about the business.
Yeah, maybe. Who knows? Maybe we'll see when they report quarterly earnings. Could be worries about the diversification in Taiwan. Who knows? I'm just we'll see when they report earnings, I guess. But something fundamentally could have changed. I know there's competition from some of the Chinese retailers in the market, but it's a bit of a moat test, and I think they'll pass with flying colors just because they have that infrastructure advantage. And I'm sure they haven't reported their Q4 earnings, and I'm sure we'll do an update on one of the power hours or even a specific show, given that's one we've covered for many years now. But who knows? Hey, I'm open to being wrong on a pick here. If you have 10 to 12 companies in a portfolio, what does Buffett say? If you're investing correctly or if you're good, you'll probably be right on 60% of them. So I could be wrong on coupon. Who knows? I brought up
Let's
CoStar though, Ryan.
okay.
Stock hasn't gone anywhere in 5 years. EV to gross profit. I'm assuming this is fine. 12.6.
What are their margins like?
Gross margins or
No, operating.
any?
I'm
I
just
know it's
curious
a
if they're
good business,
profitable.
but uh, let's load her up. So, loading. Gross profit margin 80. Operating margin, well, in 2024, 0. But it looks like it was about 10 to 20%. They may be doing that big in competition with Zillow, with apartments.com. And honestly, Zillow seems to be running circles, homes.com for CoStar Group, but Zillow seems to be running circles around them with apartments.com. So I don't know much about the business, but
Well, CoStar is mostly commercial, right?
yeah, but they own apartments.com and they started up homes.com to compete with Zillow. If I'm looking at the revenue growth, I mean, it's been quite impressive over the last decade, but it's slowed down to about 11 to 12% over the last few years. Am I really going to buy 11% revenue growth at 13 times gross profit?
Mm,
I don't know.
yeah, I don't love that. They're just I mean, I have no sorry. I have no issue with them going after Zillow because frankly, someone needs to. That is one of the most mismanaged companies of all time. I
Well, their
think
product's good.
yeah, it has been
So
for
I
10
it's
years. And the differential between adjusted EBITDA for them and the bottom line just keeps getting wider and wider and wider. And somehow, with 200 million recurring monthly active visitors to Zillow and revenue continuing to grow and the top line just continues to go up, they somehow don't generate any money. And it makes no
yeah.
sense to me.
Well, yeah, I don't think that has anything to do with CoStar trying to compete with them now because I would look at just pull up apartments.com, pull up Zillow. Zillow is a much better product. It's a different discussion that I don't think CoStar has to deal with here, and I think it's going to be quite hard in the residential or personal market to dethrone Zillow whatsoever in the United States.
Yeah. All right, let's keep moving. Bill Ackman. Oh gosh, what a week he's had. This one was not encapsulated in his 13F, but he bought a big stake in Uber. He also added shares to Nike and Brookfield.
Fees on top of fees.
Officially
Own Brookfield for the fees.
He might be my contra now. I know he probably cares a lot that I'm saying this, but I think he might be my contra because lately his takes have been wildly off. For the longest time, I mean, he owned Universal Music Group, which isn't even captured in his 13F, and he's thought that all the power rested in the labels, and he talked about that over and over. For the last 5 years, all the power has been transitioning to the distribution platforms, which in this case it has been Spotify, and we're seeing that. And actually,
and YouTube,
a diminishing, YouTube, and even Apple Music as well. There is a diminishing percentage of the revenue being allocated to the big three labels each year for Spotify, and it has been. Now it still makes up the majority, but less and less over time. So I think he was totally wrong there. He was obviously wrong on Netflix. I don't mean to bash the guy because he's done a decent job, but this Howard Hughes nonsense it just makes me despise him. It doesn't. And for context, for anyone who hasn't heard about this, basically he wants to buy half of Howard Hughes, and he wants I think we talked about this a while back, but he wants a 1.5% fee to go to him, to go to Pershing Square, 1.5% of the market cap to go
every year
to Pershing Square every year. That's
just like Buffett.
The least Buffett-like thing I've ever heard. And he got just destroyed on social media by pretty much every investor. Like, why?
Doesn't matter. He's rich. He's going to make the money. Doesn't matter. I see so many now of the hedge fund managers that, that's obviously not all of them. There's still a ton I respect out there. They're honestly probably the smaller ones that actually have the chance to interact with online or even come on the show sometimes. But so many of the ones that you are always at conferences, the Bill Ackmans and the Bill Ackman lights, like Dan Loeb or something like that. Them, Chamath Palihapitiya, all of these people I have lost all my respect for in the last 5 years. And I think my default assumption is that they're all just kind of lying maniacs. I'm serious. Because they get caught in these situations so much, and they try to basically say I'm like Buffett, or, this is something great for investors. I'm democratizing this, democratizing that. Oh, this is going to be great for everyone. And when for someone like us who can kind of analyze this type of stuff, it's part of our job, we can see that they are totally misleading people.
Yeah, it is. And maybe there's like a life cycle of the typical hedge fund manager. You start as like a pretty thorough, decent analyst. Your analytical skills turn into capital raising. And then before you know it, all the wealth has kind of left you out of touch with maybe humanity and society in general. And then your takes kind of just get crazier and crazier.
Buffett did that, but he just played bridge. But sorry, let's move on. We can't do this one the whole show.
Yeah, there are a couple others that I actually thought were interesting. So Connor Haley, he's the founder, portfolio manager of AltaFox. This is a portfolio that I was really surprised by. I actually haven't looked at it that frequently, but first of all, he's got Microsoft in there. I always kind of thought of him as like sort of the small cap kind of value world.
Small cap activist, yeah.
Yeah. But he started a new position in Double Verify, and this is a new position this quarter, and it's 9% of the portfolio roughly already. This is, I believe, some sort of an ad tech type company. This is one that I do some occasional screeners, and it has continuously showed up as sort of a cheap growth type stock. Could be worth digging into for one of us, honestly.
What do they do?
Ad tech. That's all I
That's the
know.
extent of your knowledge. Yeah,
Yeah.
same. All right. Well, more than mine. What about Berkshire, Ryan? Bought Constellation Brands. Seems like right before this price plummeted. I had some notes on them. It's actually essentially just the Mexican beer company. Modelo, Pacifico, Corona. Modelo did gain a bunch of market share after the Bud Light debacle in the United States, but I'm sure they're giving some of that back since Bud Light seems to be resetting some of their share. What do you think here? I actually had some notes. Let me get some of the guidance here, or sorry, the valuation. I have EV to EBIT of 12.2, revenue growth of 5.5% over the last 10 years, 5.5% per year. Does this interest you at all? It's fairly cheap.
I don't love the alcohol companies really across the board. Mostly spirits, I probably dislike even more, but I could
Do you
see.
like spirits less? Why? They're the ones gaining share and they have probably the most pricing power.
I don't know. Every spirits company that I've looked at feels a little mismanaged. Diageo, I thought was mismanaged.
Well, that doesn't mean yeah, sure. Diageo, yeah, their management team was like a bunch of robots, MBA robots.
I guess I don't know. I don't know what I don't like about it, but after looking at Brown Forman, Diageo, what's the other big one that's over there?
Renard,
Has it? Yeah, Pernod
something.
Ricard.
Yeah.
For one, it's I don't, a couple of them are European listed, and there just seems to be a bit of a different approach from some of those management teams in general. But I just don't. There's something that just doesn't interest me at all about those companies, and maybe I think the competition is getting steeper. Maybe it's not, but I just don't. I don't know. It doesn't really. You're not going to get that much growth. Like you
What
won't.
about places like Asia? They love whiskey in India, and they get rich. More and more people can afford it.
How much is that going to make up of their? Is that going to really drive the top line?
I don't know. We'll see. But
If I'm betting on an alcohol, on a spirits company doing well in India, which I have like 0 sense of what the popular alcohol is over there and whether or not it's like sticky.
that's pretty easy to research.
You think
They
they're
love
universal
whiskey.
brands? You don't think that India has their own whiskey that they?
I'm pretty sure. I mean, we're getting a little off topic here, but I'm pretty sure something like Jack Daniels is quite popular over there. Seen as a premium brand.
I know it's one thing to just do a Google search and say what are the most popular in India, but there's so much. I like to have a sense of what the trends are actually like from a consumer's perspective. I know that that's kind of
I mean,
my
you think
own
that's going to
personal thing.
change rapidly?
Some data says it is. Some data says alcohol consumption is changing pretty quickly.
Yeah, that's on an entire sense, or for the whole sector. But within the sector, spirit seems to be the best by far. I mean, beer, you don't have the pricing power, you don't have the premium, hyper competitive.
At 12 times EBIT, I could see why someone would own it, but I probably have no interest myself.
Maybe if they have a good buyback program. Yeah. Sorry, what did you say?
I said I'm trying to keep an open mind. I am not interested in most alcohol companies. The only one that was like kind of interesting was that the seltzer water type company, the premium seltzer water that Alex recommended looking at. Do you know which one I'm talking about?
Fever Tree. And they just got bought by Molson Coors, or proposed. Actually, I don't know if it was a full buyout, but they have a new partnership with Molson Coors.
Yeah, I just don't have much interest in the category. But another company that Berkshire has been buying. Curious your thoughts here. SiriusXM.
Get out. It's a zero. It's a zero.
I don't understand this one. Subscribers continue to decline. And also, I have heard
it's just laziness that keeps people with it.
Yeah, and I've also heard it's a nightmare to try to cancel SiriusXM. Like, They make it as much of a pain as possible. And yeah, most people, you get this automatically with your car. Like I think it's in like 80% of new automotive vehicles come with SiriusXM, and they give you like a 2-month trial or something like that. And then they make it uncancelable. And yet subscribers and average revenue per subscriber are both still declining. I don't know, it feels like a melting ice cube.
Totally agree. Not a
Okay.
single person under the age of 40 is using these, and if they're subscribed, no one is actually using them. Apple CarPlay and Google, whatever they call it, is going to slowly disrupt it, and you're going to use your streaming service of choice. It just, I think this is one. Honestly, maybe this is a hot take. I don't really care what Buffett's buying. It has no. Look, he's 94.
Also
I
might
don't care
not be
anymore.
him.
Yeah, it might not be him. Yeah.
The
And SiriusXM is a terrible company. We studied them like 2 years ago, and I'm sure it's worse now.
Yeah, and they get that Liberty premium for no reason.
Well, not anymore. Yeah. No, this is the quarter Liberty will turn things around.
It
I think. Sorry, that was a cruel joke.
Yeah, I mean, people love to overanalyze, ourselves included. Buffett's or Berkshire's buys and sells. But at this point, you know what his biggest buy is? It's treasuries. No one's really looking at that. It doesn't have more cash than publicly listed equities.
Yeah. I think it's just the lieutenants probably making all these purchases. It doesn't seem like there's much. He's got the existing holdings of Apple, which he didn't sell. You were right on that one. American Express, Coca-Cola, Occidental Petroleum. That seems to be about it.
Does it surprise you that he didn't sell Apple?
A little bit, because usually he sells, if he's going to sell something, he sells it all. But who knows? Maybe this was the lieutenant's position. It's really hard to tell.
Okay. 2 others that I actually thought were somewhat fascinating. Seth Klarman, the founder of Baupost Group. I believe we've studied him. We did a super investor episode on him.
I don't think so.
No?
Nope. Can we call him a super investor? Underperformed for his entire existence.
A large net worth investor. Maybe we can use that.
Yeah, exactly.
Bought Ferguson Enterprises. Now, the only part that kind of I don't follow Seth Klarman that closely, but what did interest me is this was the second most purchased stock among 13Fs this quarter. Ferguson Enterprises. They're, I believe, like an air conditioning or like an air cooling type company.
I'm bringing them up on FinChat right now, Ryan. FERG is the ticker. Let's see what it says in the overview.
Had you ever heard of this company?
It doesn't even have. It's small enough that it doesn't even have. Wait, no, it's pretty big. I don't know why it doesn't have that little overview there, but I've never heard of it. No. $37 billion market cap, though.
Yeah, let's do a little cooling solutions company.
Well, plumbing supplies, HVAC parts, pipe valves. Okay.
Hey, you know
Lots
what?
of stuff.
I am a big believer in the secular growth of air conditioning. I think
Yeah, is that a
will
hot take you got? Yeah, hopping on this train after 50 to 70 years?
It's probably growing quicker than housing in general. I think
Yes.
housing itself will grow. Like the number of housing units will continue to grow. I think the housing stock increases by like what, 2 to 3% a year in the US. And you're probably retrofitting a lot of older homes as well. And I would guess there's some pricing power, but I could be wrong there.
I know you don't like stats either, but in India, I know we just mentioned them, only 10% of the population has air conditioning. Maybe it's higher now. That could be an old stat, but it's also a lot of growth. And I think everyone in the world, if you live in an area where it's usable and it gets warm, will want air conditioning if they have the funds to do so. So, hey,
Agreed.
who knows? But why Ferguson now? I don't get it.
I have no idea. And it wasn't just him. It was a couple of funds were buying Ferguson. I
Mhm.
remember I looked at someone else that had done it, but I can't remember it off the top of my head now. But yeah, it might be one that's worth doing a little more digging. This is probably one of the largest companies I've never heard of, would be my
Yeah,
guess.
Tyler here says it's a plumbing distributor more, like Pool Corp. Yeah, same thing though. Maybe it's focusing on HVAC now. I don't know. I just pulled up their website. Oh, okay. This is probably why. They recently listed in the US from the UK. So maybe they're not even buys.
I see. Yeah, that's probably true. Okay, so I see why that was the most purchased.
This is why you don't need to trust 13Fs and blindly follow people.
Yeah. All right. Last one here. Dev Katasaria bought MSCI and Equifax. That seems like right up his alley. Capital light, very Modi type of stocks.
Yeah, Valley Forge is one of the few, given the buy and hold approach, it's one of the few 13Fs I think can have some signal. Trying to look at MSCI here. Yeah, they did have quite the dip. Yeah, a little bit of a dip. Price has been stagnating. What PE still at 40?
Is this the options exchange or is it?
No, MSCI is. Let's look at this summary. They provide investment decision to support tools, four segments: index, analytics, ESG, and climate. So remember, like the MSCI index, the index segments provide indexes for use in various areas of the investment process: ETFs, mutual funds, annuities, futures, options, blah, 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 blah. Analytics, lots of stuff that big funds and big investment banks pay for and probably get overcharged for, but don't care about it.
I imagine that is quite capital light. So I
Yeah,
can see how that
capitalized. Yeah.
fits in there. Okay, let's shift gears a bit. I want to talk Airbnb earnings. You want to go through some of the, I
Yeah,
guess,
let's
headlines?
let's do it. GBV, which is gross booking value, that's the amount of dollars spent on the platform every, say, time period. So in the Q4, on a currency neutral basis, it grew 15% year over year, which is an acceleration from prior years. And I think probably one of the big reasons why the stock jumped after earnings. I thought that I was pleasantly surprised as a psychological long to see that, although I've never owned the stock. And they talked about the highlights I saw. They talked about, okay, we're going to add these new products eventually. We're working on them. We've heard that before. They talk about how they're improving the core product by just adding new features and getting all of the friction and complaints dealt with. For example, those cleaning fee things, they got rid of those complaints and they worked through products to help that. Okay, that's fine. The one thing I thought that was huge and a good indicator that there might be even more room for this business to grow is the success they are seeing in localizing the app in certain large countries that don't have the same, where things just need to be a little bit different than the United States or Western Europe. For example, in Japan, they localized the app. They worked really hard on making it um, like a good app for the Japanese people, something that they would like, something that has for their cultural digital norms, and
I
they're seeing rapid growth. What?
is it just kind of like sort of
Yeah, just like how
user
apps are
experience tweaks?
designed. Yeah, like
Ah,
the
okay.
tweaks on how, like everyone, different countries use apps differently, like WhatsApp in Latin America, blah, 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 or in other places in China, it's much different than the United States. It's just localizing the experience for how people usually use a mobile app or a website in that region. And that's to say that they are seeing rapid growth in Japan now, which I think is a good sign, and some other countries as well. It's a good sign that this localization strategy can help them really expand outside of what I still think the majority of bookings are in Australia, United States, Canada, and Western Europe. So there's still, I think, a lot of room to run here. It trades at about 10 times gross profit. So not cheap, not crazy expensive. Is this a good business yet, Ryan? I still hear people telling me that Airbnb, I say, I don't know, it's a good business or something like that. And they say, well, I like hotels better. Well, great. Apparently, a lot of people disagree with you, and the data shows that because people are spending money on their platform. Or they say, oh, I had a bad experience on there. Okay, good. Well, plenty of other people didn't.
Yeah, it's a good business. It is expensive.
Yeah, I'm not buying. I've never owned it.
I will. Okay, I had a take. I don't know, maybe a couple months ago. I think I stand by this. I do think it's closer to saturation in the U.S. than a lot of people might think. Like, I am. I don't think they're going to see 20%, 30% listings growth. I could see
I
them.
mean, why would you expect that?
Well, the valuation kind of implies that they're either going to
I don't
grow
think so.
indefinitely.
Not in the US. I mean, it's implying double-digit growth globally for a long time. Even if they saw this quarter, they only had, I believe, I don't have the letter in front of me, only 5% growth in the United States, and they still saw 15% GBV growth.
In the U.S.?
No, I'm saying 5% GBV growth. So booking volumes growth in the US, but their overall platform grew 15% year over year. They even explicitly have stated this for multiple quarters now that they are mature in the United States and some other places like United Kingdom. And that's why they're moving to add on these new services, which, we'll see how those happen. We don't even know what they're coming out with yet. But to move away to Brazil, Germany, Japan, Korea, many other markets that are quite large and could use this product.
I don't know. I feel like a lot of people think of this as sort of a new concept. Maybe it's because it's 10, 15 years old, but I imagine they think of the TAM as much larger than it currently is. I'd say in a lot of the markets, they're probably pretty close to it. And it sounds
There's
like
only 5. There's 5. Now, these are the ones that they have said and given the data on that they are very mature in, and that's where the majority of their bookings are. And I believe, and I might be getting one of these wrong, Australia, United States, Canada, United Kingdom, and France.
And do you think that the majority of bookings in 10 years will still be from those 5 countries?
I don't think so if they're successful with this localization strategy. And that's why I think that data point that they gave out is the biggest signal that this strategy can work, because the travel industry is much, much larger than these 5 markets. Even though, Paris is obviously the number one, I think, travel destination in the world. That's their biggest city. France, United Kingdom, and the United States are huge travel markets. You still have Mexico, you still have Brazil, you still have Japan, you still have many, many other places that they can grow into.
Yeah, I just don't think like Mexico and Brazil are going to be major contributors. I would suspect.
Why not?
Well, because they're smaller markets than the U.S.
Well,
That's
there's
spending significantly worse.
There's people, like, it's not necessarily the traveler from these places. These are listings there, and where are people from around the world going? I mean, we can look at the biggest travel markets, but it's Spain, Italy, Japan, and places in Latin America. So it's not necessarily the traveler, like it's not the people purchasing, it's the supply and the listings in those zones. They're much, much less mature, at least on like a percentage basis of travel bookings in those markets, than the United States, France, and the United Kingdom.
I think there's a very clear path to them growing GBV at 10 to 15% for a decade.
Yeah, that's not priced in.
You don't think that's priced in? Why don't you own it?
No, I don't think so, because they can definitely get to 30%. Given the asset light nature of the business, they can get to 30% operating margin if they want, and the fact that 60% of their bookings are now directly within the app or the website, so they're bypassing the marketing spend and the search begins there. I think that adds on to it as well, and that's growing pretty quickly. So they're bypassing, the Google take rate. They have extremely high strong unit economics, and eventually they're going to add advertising onto this thing, which they've kind of said that they will do within the next 5 or 10 years, as once they get some of these core products done. Yeah, 30% operating margin makes sense. Now, I'm not buying today. I think it's going to be an adequate return going forward, but yeah, it makes sense. If it's 10 to 15% GBV growth, stock will do fine.
I don't see why this is a psychological long and not a real long if you believe that's the
I'm
case.
greedy.
The other part is, first of all, I'm pretty sure Chesky explicitly said that he doesn't want to do advertising because it's like the easiest lever to pull.
Not right now. He says that he doesn't want people ask him, hey, why don't you launch advertising now? And he says, we can but it's just something that's easy to do once we get more and more scale.
All right. Well, if it feels that it's not, what's the kind of forward earnings multiple here?
It's kind of hard to tell because they're reinvesting into a lot of these new product developments, and you have to make your own estimate of what margins can be at maturity, and that's going to be a big factor into how your valuation fits. Because right now their margins are actually coming down a bit, especially as they also are investing into these new markets, which I'm sure they're using some marketing to kind of kickstart that network effect. So I don't really know, and that's what maybe adds some uncertainty here. I kick myself for not buying when it was back at about 190 to 100 at the end of 2022. I thought that was a fantastic buying opportunity. Still think it does fine from here, but
Do you think
I'm not sure.
you'll be kicking yourself again in 10 years?
When it's up 3 to 4x, maybe, but that's okay. That's okay. I'd rather just keep it on the watch list, and I'm sure there will be a recession at some point. Maybe that's just too confident, but I got other stuff in the portfolio I like. I'd still think it's a fantastic business. We have a comment here. You have inflation protection. You have price increases from the host that you just get, passed on to you as a take rate as a percentage of their booking. Um, the moat widens the larger the business gets, which is great. So the bigger they get, the wider the moat gets. So you have a great North Star to target. More supply in the marketplace, more spending on the marketplace. And as an investor, that moat is easy to track. Whereas we were having this discussion on the alcohol brands, we kind of have various opinions. You can come up with varying data points, and you're like, well, I kind of think this brand is strong, or, okay, I still think it's rock solid. Yeah. I think with this one, it's much easier to track whether the business quality is getting better or getting worse, similar to a Visa.
Yeah, it's just that the more the network grows, the more valuable it is to the other side of the network. Looking at EV to EBITDA, there could be some stuff that's
Yeah.
wrong with this, but
I'd
I
use
would
EBIT,
guess,
maybe.
I imagine they're quite similar, right?
Yeah, probably.
There isn't a whole lot of depreciation would be my
Yeah, true,
guess.
true.
Yeah, they're
Yeah.
like the exact same. 35 times trailing. I think that is a reasonable price. I might be a little more interested than you at this point, to be honest, Brett. If I do think I just kind of without even looking, just assumed this was more expensive than it is.
Yeah. And I think that EBIT is earnings before interest and taxes. Their interest, the interest income is quite high, so that can help as well. We did have someone reach out, a long time guest that may be coming on the show to do a report on them, so that could be fun. It's an interesting time for them, for sure. I will really be fascinated what products they come out with these new things they've been hyping up for a few years, which I don't know, maybe the one disappointing part is that the CEO founder, Brian Chesky, is a bit of a hype man, but he seems to follow through on a lot of his stuff.
All right, before we move on, I want to mention one of our sponsors here on Chit Chat Stocks. That's Blue Chippers Club. I've noticed that a lot of listeners have recently joined the Blue Chippers Club. For anyone that doesn't know, this was started by two friends of ours with the goal of building a tight-knit community of stock-focused investors. Inside this community, everyone gets to share and break down their portfolios, pitch stocks, receive feedback, and participate in weekly calls. Brett, I saw you recently put your Nintendo show notes on there. I also posted some thoughts on Adobe as well. So, to be honest, it just feels like a much more valuable community for sharing stock ideas without having necessarily the spam or the stuff you don't want, like some other social platforms. So,
And
if
the
you're
aginess of Value Investors Club, we all know how frustrating it is to use that platform.
Yes. If you're interested in joining, you should head on over to bluechippersclub.com and hit apply. Right now, it is completely free to join. The link will be in the description. I also want to mention our friends at Public one more time. If you are serious about investing, you need to know about public.com. That is where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with a bond account. Public is a FINRA registered SIPC insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/chitchatstocks and get up to $10,000 when you transfer your old portfolio. That's public.com/chitchatstocks, paid for by Public Investing. Full disclosures in the podcast description. What do we want to jump to here, Brett?
You want to do the bubble watch? This
Sure.
was an interesting story.
Yeah.
All right. I don't know if anyone heard this. I think I was kind of late to the party since I was off of Twitter on the weekend, but the president of Argentina promoted a meme coin. And I'll ask you, Ryan, what world leader would do such a thing? Who would do that and try to get away with it? No, just kidding.
I mean, didn't the
That's what I'm saying. Yeah.
Oh, okay.
Yeah, I'm implying that. Yes. Okay.
Recently, it's been a lot of leaders.
Yeah, exactly. Okay. The timing of the transactions on this one are highly suspicious. The coin was called Libra, Libra. Half an hour before Milei promoted it on Twitter, the coin was created. So that timing there is a bit suspicious. Here is a quote from some Argentinian newspaper that I found that kind of timeline some of this, and I think as well provides some suspicious things. Quote, 5 minutes before Milei posted, various users from the team that developed Libra transferred funds so that investors can buy and sell Libra. Quote, within 45 minutes, the price of the Libra tokens had ballooned, peaking at US $5.54 each. The first Libra buyer paid 20 cents per token, purchasing at the same instant Milei published on X. I'll say that again, the same instant he published on X. Around 37 minutes later, that user sold most of their tokens, making a net profit of $6.5 million. Quote, around 40 minutes after it was launched, the first users who had bought Libra started to sell. That promoted a 70% collapse in its price over the next hour. It dropped from, so we don't need to even go through the numbers. Lastly, according to crypto analysts, most of these sales were by users who were on the project's development team. This was confirmed by Hayden Davis, an advisor to Milei and chief executive officer of the company that created Libra. In an interview with Steven Findestein, a YouTuber known as CoffeeZilla, Davis admitted that he had made around $100 million, that he holds still around $11 million in the cryptocurrency, and that he made $13 million in fees by selling the coin. In total, he had $113 million in profits. Golden age of fraud, Ryan.
This makes me so mad. It's so frustrating.
I wanted to like this Argentinian president, huh?
Yeah, same. I was like, well, he seems like he's doing good stuff. Maybe. I mean, honestly, I don't really follow him that closely, but yeah, this is a major bummer. If you are
for a country whose currency consistently is like one of your biggest headwinds, flaws and stuff like that needs to be fixed and stabilized, and is causing some of the hyperinflation in your country, doing this joke coin and having that lead your reputation, is that going to convince other countries and financiers and Wall Street to have faith in you? No. It's going to make them lose faith.
If you are a influencer, some sort of social media personality that has no social responsibility whatsoever, yeah, you know what? Go for it. Do whatever you want with your meme coin. Good for you. Hopefully you make money. But if
you know what?
If you're a politician, no.
Yeah, I agree. Yeah. I still lose respect for anyone that does this. We get DMs all the time for this. You should probably check your spam folder. You get this as well. They say, I have a meme coin. I will pay you to promote it. And I always say, our starting price is $1 billion. And then they don't say anything. But
yeah,
if someone pays us $1 billion, maybe I'll do it. And I'll say we'll donate a bunch more to the victims of the pump and dump. We have a comment here that says they found a way to shorten the IPO dumping cycle. Why even bother making a company? You can create a meme coin, no regulation, dump it on speculators. Yet this does seem to be the same as the pump and dump for the scammy IPO companies. Pretty much the same.
Yeah, it's a little discouraging, honestly. If you're thinking about building something that might benefit society in any way, why waste your time? You could spend 10 seconds developing a meme coin that provides nothing to society and probably make more money. So yes, I
Yeah.
think this is a gross misallocation of money, and this might be the one thing China got right. Yeah, I
They
should.
get other things right.
No, I take that back. That was a bad statement. But with all the crap that we give to Chinese capital markets, especially, that they, I believe, basically shut down their
Yeah, they nuked the
crypto.
industry. Yeah.
Yeah, and
Smart.
it seems, I don't know, like I know this is going to make a lot of crypto investors upset, but it's a huge waste of both development talent and literal energy. So that, yeah, I think sometimes the world might be better off without a bunch of meme coins. What else do we want to talk about here? You have Super Microcomputer is back in the
Yeah.
news, unfortunately.
Well, let me pull up my notes. They reported earnings, but at the same time, they said they can't file their 10Q on time. So you know what that means, Ryan? Stock up 40% in the last 5 trading days. Maybe my fear and greed index at 8.5. Maybe I should have pumped that up because the reaction to these earnings, which we don't know what they earned, really. We don't know what their cash flow is. We don't know any of the nonsense that people have been claiming they've been doing. Um, I'm assuming that's why the 10Q is delayed because they have to figure all that stuff out and make sure it's on the up and up for once. They are guiding for $25 billion in revenue this fiscal year, which I think is offset probably into the summer. So it's not the calendar year. And then for fiscal year 2026, which I'm sure they know exactly what they're going to earn or get in revenue. Like they're guiding for $40 billion. Yeah, okay. You don't know what you're going to earn in a year and a half. I'm sorry. Their gross margin is just over 10%. Their market cap is $33 billion. They're raising $700 million in convertible notes. I guess the party's back. No fraud here. Like, are we forgetting that a few months ago there was just giant investigations into this company that seemed to have very damning evidence into their accounting practices, or am I crazy?
I think a lot of people have probably just been desensitized to, you go to an investor relations site, you click on a link, you see the bullet points, and you just trust it. And
True.
maybe even they drop financial, like, some cursory financial statements or like ones that haven't been audited. And you just, maybe that's part of probably investing in America, is you've been kind of taught to think that that's trustworthy information. So I could see why it trades up on great numbers as long as the bullet points are what management wants them to say. I mean, they could say whatever they want. I would be concerned without a 10Q. I'm a little surprised this hasn't been delisted.
I think, well, they have
Aren't
time.
they?
They have time.
I thought they were way overdue on some
Maybe.
old
No, no.
statements.
I think they finally filed that one from the fall, but I'm not exactly sure.
Yeah. Look, accounting red flags tend to add up over time. And a company that is this large and has this much does this much in business should be able to piece together a 10Q. It's not like
What's
you're an illiquid microcap who doesn't have the money or the resources to have a robust accounting department.
Yeah, what's funny is that this would be an extremely risky company to own, regardless of the accounting stuff, because it is almost like it's almost like a supercharged version of Nvidia, where if the AI spending, if the data center spending, the cloud computing spending breaks, they are in a load of hurt.
Yeah. Yeah. I mean, it's
That makes it risky on its own.
a picks and shovels provider to,
The picks and shovels provider,
yeah. I mean,
kind of.
the success of data centers, right? Like, or the growth of data centers, which I think a lot of people would expect that over the long run should be good. But when you're a business that is probably pretty inventory heavy, would be my guess, and kind of a hardware supplier, there's you go back to the .com. We talked about how recently we talked about how a lot of the big tech companies, they're investing a ton right now, and there's the risk of overinvestment. Well, the good thing is that all those businesses, Microsoft, Amazon, Google, have wonderful core businesses to fall back on, so it's not going to break them as a company if they overinvest. If you are solely a hardware provider or picks and shovels provider, and there is a downturn, you have a lot more risk than the data center providers or the data center users in this case. So, yeah, I think it is a very inherently risky business on top of all the accounting shenanigans.
Yes, sir. Okay, nothing more to add there. I will say we're using some of the data, bringing that up from our friends at finchat.io. Use our link finchat.io/chitchat. Get 15% off on any paid plan. Link is in the show notes there. We use them on every episode, every stock research report. We think any individual or professional team could utilize them as well. All right, 5 minutes left here, Ryan. Want to hit the small cap of the week, and this is a recurring small cap. I think we've done one of this company on a yearly basis, but it seems like on a regular basis, a new investor throws this idea out there.
Yeah, this might be, well, it's the small cap of the week, and it's maybe also the future small cap of the week as well. The company is Peloton. Can you guess the market cap?
Without looking, I don't know if you have it on here. 1.2 billion.
3.75.
Wow.
Can you guess what the returns have been over the last year?
Down 90?
Plus 126.
Jeez.
Yeah, a little bit of a revival. It's still down.
Revival. How are the numbers? How are the numbers here?
No, I guess I haven't dug that much into it. What inspired me to look at it was David Einhorn apparently invested in them, who's kind of sort of I would say sort of textbook deep value type investor. And he said, this is a quote, it says, "We presented our Peloton thesis at the Robinhood Investors Conference." I don't know if that's like Robinhood, the brokerage.
No, I don't think so. No.
But he said, "We had presented it in October and previously sent you copies of the presentation." He says, "Yes, David rode for 20 minutes while presenting the thesis. Peloton was a popular stock during the COVID era as demand for at-home fitness products and services skyrocketed. During this time, the company invested heavily for growth without any regard for profitability or expense management. After multiple missteps and subsequent management changes, the stock fell 98% from its peak in early 2021. Throughout this time, Peloton has maintained a loyal and engaged customer base through its subscription-based business model. Recently, the company has committed itself to dramatically cutting costs. Should Peloton be successful in right-sizing its cost structure, we expect significant EBITDA generation, and when applying a peer multiple to those profits, we expect the stock has significant upside." Now, I guess this is my question. Wasn't this the thesis 90% ago?
Yeah. Hey, it's worked out so far. Double for them. I don't know. I just the question I ask here, is this a good business? Obviously, no. Okay, I'm not interested.
Yeah. Like, I get the appeal of like, okay, they shaved off a whole bunch of users, but now they've got like this sort of smaller pocket of really high paying subscribers that love the product and they're like just huge Peloton fans. But they also brought in, was it Barry McCarthy that they brought in, who's like pretty known for, and I believe he did several rounds of layoffs, and he was very forthright in his communication with investors and basically said like, look, I'm going to try to cut costs and make this a viable business as much as I can. And then eventually even he stepped away and couldn't make it happen. I just kind of think like, if he wasn't able to do it, is someone else going to be able to do more than he did in terms of cost cutting while still growing the business? That seems pretty unlikely.
Yeah, I agree. I think maybe the take would be he was dealing with an unfixable COVID bullwhip, and now we've gotten through that. I'm gonna look at their operating income here. Uh-oh. Is that on? Okay. Oh, I have it on the percentage thing. Uh-oh. How do I change that? Common size. No common size. Well, maybe I can share this chart. Let's look at their operating income since going public. Well, it's actually even before, because they'll have some of that S1 data. I'm going to show it to you, Ryan. See if you can notice a trend here. Not a
Well,
single positive year.
what's the quarterly looking like?
Okay. Quarterly. I'm sure they had one at least. Hey, September 2024, positive. It's moving in the right direction, but
Yeah.
let's see how revenue looks.
But here's my thing: is it's moving in the right direction, but they're also aren't they basically shrinking the business? Yeah, revenues contracting as well. So you would hope that they could get very profitable when they're cutting so much costs and at the risk of revenue too. So
Like here's the thing with Peloton for myself. Maybe Einhorn's going after it in a different way. I don't know what his thesis timing on this is, but if someone said it in 10 years, is Peloton gonna be exist, or if it doesn't exist, it's like a tiny business. I would say I don't know. I have no clue. I could easily see this business not existing in 10 years. We saw that it was mostly a fad. Remember when the founder said, "Yeah, I think 100 million people are going to use this someday," during the pandemic, and then they got a $60 billion market cap? It's not true.
yeah, he also said they're very profitable and they just weren't. Which that
Yeah,
guy made a ton of money too, selling out, I believe, at the top. So kudos to him.
golden age of fraud. Golden age of fraud.
I do know some people that like swear by their Peloton still. So maybe, whatever that anecdotal evidence is worth, maybe there are people that just love Peloton enough to get them over
So 3.7
0% net
billion.
margins.
Yeah, I mean, if they could get to $200 million in earnings, it could somewhat work, but
That's a ways away.
it is. It
Yeah.
is a ways away.
I've got no interest in this one.
No, too hard, too hard. Yeah, play easier games. Okay, I think that's it, Ryan. We have some stuff that we can probably hit next week too. We forgot to hit Elf Beauty earnings.
What about the
They're in
dating
it.
apps? Bumble.
Yeah, maybe we can get some real big fallen soldiers next week. Elf Beauty, dating apps with Bumble, lots of stuff. A lot of these companies are reporting some um, sketchy earnings. Not sketchy, but disappointing earnings. And hey, there could be some diamonds in the rough there. All right. Anything else before we sign off here?
I think that's everything.
All right. Thank you, everyone, for joining. We do these live on the Chit Chat Stocks YouTube page every Wednesday at 1:30 p.m. Eastern Time. You can watch the recordings on the YouTube channel or listen on your podcast player of choice, Spotify, Apple Podcasts, even YouTube Music. You'll be able to listen to there. Let me see. Disclosure. We are not financial advisors. Anything we say on this show is not formal advice or recommendation. Ryan and I, or any podcast guests, may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, for tuning in, and we'll see you next time. What'd you think? This guy says HNST next week.